Here is Vishan in Toronto. Hi there.
Hi, I'm a young investor, just purchased stocks in Applied Materials based on strong fundamentals. Ever since I've bought them, though, they've just been going down. What's your see on the stock? Like, should I sell it or hold?
Okay. So in the semiconductors, this is one of those sectors that you really need to get the sector right. You know, a great stock in the wrong sector is like a nice house in a bad neighborhood. You're not going to make any money. So in the Applied Materials case, the semiconductors are a group that tends to turn up early out of a correction and will be one of the first groups to turn down. And we spend a lot of time watching the semiconductors for indication as to what we think is going on out there, partly because semiconductor companies have very quick inventory turns, and you can see the pickups in demand and slowdowns in demand quickly. The semiconductor space has been backing off over the last 2 months, and so I think you're fighting the tape when you look in this space. Applied Materials basically has been trading in a range for the last 4 years, 3 years, between sort of $10 on the low end and $15, $16 on the high end. It's right back to the low end of the range. So, you know, you can watch it, but I don't think that the industry is the right industry to be focused on just yet if you think that there's some equity risk currently.
The company did come out with earnings after the closing bell and beat analyst estimates on the bottom line, and I didn't see the top line number, and they're actually affirming their profit numbers for the year at the high end of the range. We'll see how that stock performs tomorrow. Sharman's in Toronto with a question. Hi there.
Hi, thanks for taking my call. Just wanted to get your view on Crew Energy. I am long, and I understand your view as well that it is not quite the time to buy into precious metal or energy. So what's your take?
Yeah, again, and I recognize you're probably down a fair bit. The stock's down a long way. It has been moving down week after week after week from $14 in the most recent move. I recognize the horse is a bit out of the barn on this one. I still think you need to protect yourself a little bit. So I would not own the stock. You can look and see that there's some support back at the lows in sort of the 350 range back from 2009. So if you're looking for some level of support, you could see some support there. But this is one of the weakest performing stocks in the group, and it's not going to be the first one that people go to buy when they decide to put on new positions. If I was going to own one company in the space, I'd probably look at Trilogy as opposed to Crew. And frankly, because they got great prospects, technically the stock's hanging in much better. It's really well managed, and it will be one of the first stocks that people go to if the group starts to heat up.
52-week low on Crew today. And, yeah, you're looking at a multi-year low going back to 2009. Ugly chart, to be sure. Here's Freddie in Saskatoon. Go ahead.
Hi, fellas. David, my question was nominally on Air Canada, but I've watching this CP board battle take over with a lot of interest, and I'm just wondering, do you see any analogy between CP and CN and, say, WestJet and Air Canada, or is it kind of apples and oranges? I'd like to get your insight on this. Thanks.
Sure. Well, you know, CP and CN are quite different businesses, right? CP is much more east-west, much more bulk. CN has more north-south traffic between Canada, U.S., and obviously stuff that's going down into Mexico. They've been run differently. We voted for the CP change. You know, if they can have Hunter Harrison, he's a great operator. You know, if they can get the operating ratio down into the low 60% range, that would be wonderful. That remains to be seen. The rails are one of the sectors, actually the only sector in the transportation group that are performing well. And so, you know, we do have ownership both in CP and in CN. Dividend growth has been pretty good in those companies. If you were to do a comparison, Air Canada versus WestJet, it's not as stark a comparison. You know, Air Canada, the equity is close to gone, and of course WestJet's doing quite well. You know, I would own WestJet. I wouldn't own Air Canada equity. Might own Air Canada debt. But you know, they are quite different companies. I think that the CP looks pretty good, though.
Lots of people want to talk to you tonight, and we've gathered together a whole bunch of questions in the Market Call Minute coming up. Don in Ottawa wanted to know about Teck Resources.
Large cap commodity stocks I think you want to be very careful. It does look like there could be significant downside risk if we break the lows from October.
Wayne's in Halifax, Nova Scotia, ARC Resources.
Yeah, be very careful again on the energy. I would not buy the stock currently.
Anton in Toronto, what's your opinion of Lululemon?
Lululemon's a great company. It's backing off recently over the last couple of weeks with some of the leading stocks in the retail sector. Great execution. It's a stock I would look to buy on market strength.
It's not too rich for your blood?
No, I'm okay paying for growth.
John's in Toronto. He'd like your opinion on Las Vegas Sands.
So Las Vegas Sands obviously very levered to Macau and very levered to leisure spending. Asia, with its weakness right now, I think is an area we stay away from. We have no exposure currently to Asia. Las Vegas Sands probably not the right stock to own right now.
Have you owned that in the past?
We certainly have.
Yeah.
It was very good stock to own coming out of the restructuring that took place in 2009.
Right, that sounds familiar. Amy, via Twitter, she tweeted, Chorus Entertainment.
So this is in absolutely the right neighborhood. Media stocks have been doing quite well. We own News Corp. We own, in the cable area, Comcast. And the Chorus Entertainment we don't own, but the cash flow from these companies is pretty good. I wouldn't have a problem owning the stock. Just keep in mind a tougher market.
AMAT is a chip equipment manufacturer. Intel, of course, is the king of the chips. Maryland wants to know about Intel, INTC.
Okay, so Intel is the king of semiconductor manufacturing. They are as good as it gets. They're winning in market share in tablets, in smartphones. It's got great dividend growth. And when we talk about long bases, the large cap tech stocks have been basing since 2000. And yes, Intel's pulled back a little bit in the short run and maybe has some risk in the current market. It's the strongest company in the group by a lot, and it would be a good core holding for people to have.
But you don't hold it right now?
Don't own it currently, but I would look to buy it on any market strength if you felt things were firming up in the market.
Okay, David's got his eye on Intel. Let's take a short break here. Thanks for all those calls and emails and tweets. David covering a lot of ground tonight. Let's get to the top picks right after this.